how much of your living expenses alone are covered by your income that you're generating from your portfolio?
100%.
100%?
Everything. I found out on May 15th that I was getting laid off. I would never recommend what I'm doing. Like, just keep your job until you have enough money. I actually took out a $50,000 personal loan and I invested it in Robinhood. Everything is NAV erosion. There is no such thing as a no NAV erosion when you have high income ETFs, but it's mostly because my entire portfolio has to average a 70% yield for me to be able to live. Well, you could get 100% distribution with MSTY. And I was like, first of all, is that a scam? And second of all, yes.
I'm just fascinated by this. I don't know how people are going to react, but
I know it sounds delusional because I am generating 100% yield and I'm living off of the 100% yield. So don't do what I'm doing, please.
do you think that the average person could do what you're doing? I know that the answer is no. Now, if you guys want to see my whole entire $350,000 ETF portfolio, you guys can see it for free on the Blossom app using the link in the description of this video and in the pinned comment section. You get to see my portfolio, my trades, and so much more. And I will see you there on Blossom. Investors, welcome a very special guest. We have Amy, also known as Bad Financial Decisions, also known as Miss Roundhill on YouTube, who talks about everything of income investing, cover call investing, and her own personal journey navigating through this crazy cover call ETF market. Amy invests in mostly high income ETF products with higher yields on the higher yield range, and she's doing her best to live off the distributions of her portfolio as a result of her cover call ETF investing journey. So in this video, we're going to be deep diving on Amy's investing journey, her philosophy of investing, and so much more. So I'm super excited to welcome Amy to the channel.
Hi, thank you so much for having me, Marcos. I really do appreciate you having me on here.
A disclaimer is that this content is for informational and entertainment purposes only. This is not financial advice. We are not financial advisors. Do your own research. Investing involves high risk. First question for you, Amy, is can you introduce yourself and give us an overview of your investing journey from the beginning up till now?
Hi, my name is Amy. Thank you very much for watching. Let's make some bad financial decisions together. I am Bad Financial Decisions on YouTube. I am Miss Roundhill on Twitter. I have Financial Philharmonics where I make AI music about personal finance. I also am the creator of YieldMax, which is a tool that I created. I was going through all of these high income ETFs. I needed a comparison tool. And because I am a programmer, I created that so that it would be easier for me to talk about comparing ETFs. And I found that it's YieldMax.com. And basically, if you put in an amount, it'll tell you what the latest distribution would have been. So it's a good discovery tool. We have about 250 ETFs there now. The first question was, what was the journey? And I had a condo in DC. I moved over here to Tennessee. I'm on my parents' sheep farm right now. And I was trying to sell my condo. I was in the middle of the third buyer, the contract. It was the second attempt with them. And I woke up one morning and I was like, this contract is not going through. I am not selling this condo. And so I was researching leveraged ETFs to figure out how to do swing trading and making sure I knew my, how I would do my method with that. But then I was watching Targeted Wealth Creation. And if you know the way that he speaks, he's like, well, you could get 100% distribution with MSTY. And I was like, first of all, is that a scam? And second of all, yes. It's so much more relaxing to buy into an ETF that is paying 100% than trying to figure out swing trading with leveraged ETFs. So that really started me doing a bunch of research. And then I was listening to Retire on Dividends one day, and he said, hey, if you want to start a YouTube channel, you should talk about high income ETFs. And so I had a bunch of knowledge and I could talk about this forever. So I actually asked him for an affiliate link. And my very first YouTube video, I used his affiliate link to Robinhood to open up my Robinhood account. So you all have been here every part of my high income journey.
So right now, are you still living off your portfolio? And so How long was that condo, journey?
The fourth fire, which that one also fell through. And then I was employed up until May. I was slowly building up my portfolio responsibly. I had $35,000 in my account in May, and I earned $3,000 that month. I found out on May 15th that I was getting laid off. So I gathered a bunch of funds, a lot of things that are unconventional, not the best, but I was doing the best I could in my situation. The fourth buyer, it did fall through. So I still have my condo. I was needing to live off of my distributions. So by July, I had $220,000 in my portfolio and I made $27,000. But in September, the fifth buyer came around and I sold my condo on September 5th and I paid around $100,000 to get rid of my condo. Yes, it's been a little devastating, but I am currently living off of my high income ETFs.
So what got you so interested in investing in high income ETFs versus lower yielding products that have, let's say like SCHD has like nearly 4% yield, maybe even lower yielding cover call products like SPY, QQQI by Neos that have 10 to 13% yields, but you chase the highest yield possible, in my opinion, or higher yields.
In May, earlier this year, my thought process was with my small account, I don't have a large account, but if the renter I had at the time, for some reason, couldn't pay the rent, whatever's happening, I want to be able to cover the rent in my condo. And now with the small amount that I have in my portfolio, like if I had $2 million, I would probably be an SEHD. Like I would probably, like I would gravitate to more conservative things if I had more money right now. But high income ETFs really democratize cover call strategies because my portfolio is really not big enough to be in really high quality stocks and do that cover call and it be a proportionate part of my portfolio. So to me, I'm able to be in a diversity of things because of cover call ETFs.
I want to know, how did you come up with the name of Bad Financial Decisions? I thought we were supposed to be sharing good financial decisions on YouTube. And also, how did your name Miss Roundhill come about? Because you have Roundhill ETFs, but also other issuers as well.
The way that the finance space and most of YouTube works is you're supposed to establish yourself as an authority figure. So I could say, my name's Amy. I have $1 million portfolio. I'm making $30,000 a month. If I am someone that you should be listening to because I have credentials, but I wanted to avoid all of that and just share my journey. So I cut off all of that. And that was the thinking behind that. Also, there was a Reddit post that I read that said, my sister exclusively makes bad financial decisions. And I was like, wow, that would be so nice if I could do that and not worry about every aspect of that. The Miss Roundhill, basically a big creator had a persona that was Miss Roundhill and he had named her Amy like a week before. And then he discovered my video and he told his audience, it's the actual Miss Roundhill. And I, instead of being like, no, I went with it and I rolled with it and it's fine. A lot of people thought I was AI and just a voice because I was a faceless YouTube channel, but I got invited to the YieldMax thing in July. So
what is the current dividend yield of your portfolio right now?
It is a little all over the place. I'm trying to go a minimum of $10,000 and my actual goal is $15,000. I just want to do it in a way that's sustainable for me. I don't want to go to like a big degen move, get a lot of income this month and then not be able to reproduce it in the next month. So that's what I'm trying to do, is between $10,000 and $15,000 every month.
So walk me through like your current portfolio, if you can, because I know you have a lot of holdings and you have leverage trash, margin, Michael Saylor portfolio, Roth IRA. Walk me through your current portfolio.
I have my margin account because it's my margin account. And that I have about $50,000 worth of margin in. And my portfolio is only $128,000 right now. So that is a disproportionately large amount of margin. So I need that portfolio to not move up or down. I need it to be steady, and I need it to be my workhorse and my cash cow. And that's how I'm paying for my entire life right now. So what was happening was I needed like 80% distribution, but you can't do that without having riskier things. So when Robinhood came out with you can have multiple accounts, I started my levered trash account so that I can still have higher IV things, but it's in a cash account, so it can't hurt my margin. So I've started to slowly migrate my like more concentrated and higher conviction things into my leveraged trash account so that it can't hurt me. And then I wound up making my Sailor Mooning account because I have a weakness for everything strategy related. And I wanted to start just doing my silos where I'm just taking the distributions and buying into the other ETFs and just growing that account and as an experiment to see how we can do between now and the next halving.
In terms of your margin portfolio, so you said that you're living off that specific account. Has that been stressful? What's it been like? Like, how have you been feeling about it, doing it from the beginning up until now? And just like, how do you sleep at night with, I guess, a good amount of margin?
My audience is starting to make fun of me because I would like change that portfolio so much. So after I got everything set up, I was like, we're just going to stick with this for the rest of the year and then we'll reevaluate. This morning at 11 a.m., I made a huge change. I sold out. As of last night, I had 30% of my portfolio in NVYY and PLTW. And I was looking at it and I was like, what are you doing? This is weird. Why would you have 30% of your portfolio in leveraged AI at the moment and just two companies? And for the record, I do like Chippy and GBTY. Like they're the better like ETFs because they're multiple companies. It's just that I like PLTW and NVYY, they were paying high dividends, so I needed that income. So what I did was I sold those last night, and this morning I bought 4 SPY leaps. Now 30% of my portfolio is in SPY leaps, 30% is in gold-related ETFs, 20% is in inverses, 15% in Bitcoin, and 5% in like HCOW and YieldMax. I think having the SPY leaps and me being able to choose the strike price and how much I need is going to be helpful in the long run. It's not helpful right now because none of that is marginable. So I have a very small margin buffer right now. But in time, as long as I beat the sequence of returns risk, I should be fine in 2 or 3 years.
If you can share, like how much roughly do you earn in distributions per month or per year at the current moment off your portfolio? And like what kind of account balance do you have as of right now?
Total in my taxable accounts, it's about $150,000. And I'm aiming for $120,000 this year in distributions. So yes, it is 100% yielding, but I've been able to do it so far.
And that's been stressful and complex, do you think?
In its own ways. It's just the fact that like I had 30% in ULTY. That's really not relaxing. I had, 30% in leveraged AI stocks. That's not relaxing. But right now it's in gold in the SPY. So, it's better. The only stressful thing is when you do SPY leaps in the morning, you sell the call, and then by midday it gets way more expensive, and then at like 3 p.m. the price breaks, and then it becomes really cheap again. So like surviving and not looking at my portfolio in the middle of the day is the new habit I'm going to have.
What are some of your favorite ETFs that you invest in your portfolio out of this? I know you have quite a bit of funds, but what are some favorites that stick out to you?
Me holding it is not the same as me recommending other people own it. I still like YSPY. It's not leveraged, but it's selling puts on leverage ETFs by grant shares. is paying like a 50% distribution, which is nice. And I've been personally increasing my WPay in my Roth IRA account because there has been a pullback. So with leverage ETFs, when there's a pullback and a good price entry point, I feel like that's the more appropriate time to get into those type of things. I don't have it in my portfolio, but I'm keeping an eye on KYLD because I think it's going to be a good option of like not completely degenerate, but also higher income than normal. And if you're looking for themed ETFs, and you just have to be careful with how much of it's in your portfolio, blocks, GBTY, and Chippy.
You primarily own, to my knowledge, Grant Shares, Roundhill, YieldMax. Why those issuers out of, there's so many out right now, so why those specifically, those three core ones in your portfolio?
But it's mostly because my entire portfolio has to average a 70% yield for me to be able to live. There's only so many ETFs that have, because I wanted to be in like GLDY, which is from Defiance, which doesn't pay as much. So if you want to be in lower paying yields and it has to average out to 70%, then you have to be in some higher yield ones. So those are just the ones that I could buy that I felt confident on the underlying, that I liked the strategy that they're using. And so it just worked out that way for now.
How did you calculate that 70% yield was what you needed for your lifestyle and your needs?
Oh, yeah. I mean, that's pretty easy. I was like, I need $9,000 a month because of my basic living expenses and overpaying for my debts that I have. So just multiply that out, by 12. And, if I had my Excel sheet, I could show you. But basically, it was a pretty simple calculation of I need, $10,000 a month if it's 70%. And I have this amount of money. Or it's like I need this much per month, multiply it by 12, divide it by the amount of money I have, it's 70%.
Why do you think that so many investors are gravitating towards cover call ETFs? Is it maybe like they need financial stability and they don't have that in, everything's so expensive, right? Right now, you go to the grocery store, you try to go out to restaurants, and you try to look at the prices of things and they're super expensive. And maybe some investors think that cover call funds could be another supplemental income stream for them. But I'm going to ask you, why do you think that so many investors, young, old, experienced, beginner, are gravitating towards these cover call products?
I think it's actually rather intuitive where, okay, this fund has a 12% yield and it's appreciating over time. Not a lot, just a little bit. But SCHD is also appreciating not a lot, just a little bit. It has 4%. Well, if you have something that pays 12%, you have something that pays 4%, you need 4 times more SCHD than, let's say, like QQQI, as an example. And people are nearing retirement and they say, well, I only have $500,000. What can I do with $500,000? Starve? That's not an option. Let's do the 12%, maybe reinvest. I think Brad says, live off of 8%, reinvest the other 4% so that you always have more. I gravitate towards dividend and these cover call ETFs because I don't have to sell my principal. What people say is invest in VU. When you're retired, just sell 4% every year. You're going to be fine. There's not going to be a great stock market. There's not. I just would rather, and I know that especially with SAHD, it's kind of like 6 in one, half dozen the other. But I would rather be in more like cash flow. Well, in the instance of SCHD, they consist of different companies, ones that have more free cash flow, better fundamentals. I would rather get the dividends from those kind of more stable companies in retirement than try to be in extreme growth funds that fluctuate in price, and I might not get a good price when it's time for me to withdraw that. So for me, it's just it's mostly a psychological thing, but also a 12%, 20%, 125%. You need less money in order to live.
What are your thoughts on the YieldMax drama? You probably know what I'm talking about. And you said that you invested in ULTY, and I want to know, what was your experience with that?
Yeah, I mean, there's so many controversies for us to choose from with YieldMax. The first one is with the single stocks. And YieldMax picks really high implied volatility ones. Maybe they don't have the best fundamentals. They definitely have the most momentum and the highest IV. So if you get it at the correct timing, then you were pretty happy. I was pretty happy. I was in it July 2024. I got all my money back. And I wound up having to sell it in September because of my condo sale. So I didn't live through my entire NIST portfolio going down 40%, So being unhappy that your underlying is not performing well, that's natural. So I think they'll always get that when the markets are bad. The thing specifically with ULTY, the prospectus is written. There's no theme. They can choose whatever underlying that they want. And they were insisting that this ETF is about basically being the biggest degen on the block, getting the highest yield. And when you're a big degen and you're in a bunch of these weird momentum meme type things, you're going to lose some bets. And they lost some bets, and now there's no NAV. And you don't regret bets that you win. You only regret bets that are lost. So they've learned lessons, like they've added the downside protection for really sharp losses. And starting last week, they started adding some more mega caps. Obviously, 30% of my portfolio is not ULTY anymore. I have at certain points done tax loss harvesting with ULTY because I'm like, well, this is going down. So I'm just going to sell out. I'll get back in a lower price point. And I kept hearing, oh, well, ULTY stabilized. ULTY stabilized. I wasn't very outspoken about it, but I was like, no, that's not how ULTY works, using the word intuitively. But basically, if they lose a bet, and they're going to lose bets because it's high IV things, then it's going to go down. If the market goes down, it's going to go down worse. So I think for me, I still have 1,000 shares, which will turn into 100 shares. I'm excited that I'm going to be able to do the dividend wheel, that it's going to be high enough price that the option chain will be nice enough that, if I get stuck with ULTY, I'll still get, I don't even know what the typical amount that we're going to expect going forward. Is it 50%, 60%, 70%? Whatever it is, it's higher than a normal distribution rate. So I don't mind doing the wheel on ULTY. It just needs to be between less than 1% of my portfolio going forward. I think that was about it with and the reverse splits. I was in the space and I asked them for it, so it would be very unfair of me to be like, why would you do reverse splits? Because for me, I didn't want them to do a reverse split without them first having fixed ULTY. I wanted them, if they can prove that they fixed it and it's going up a little bit, I just think that $5, sub $5, it's not enough breathing room for ULTY for the degen plays, because they are going to lose some. And when it's at $4, every penny it goes down, you're like, that's not amazing. But if they're in mega cap things, they've fixed the downturn stuff, and it's still, I look almost once a week at the holdings. I'm like, well, yeah, I would, if I had $3 million in my portfolio, be in this stuff. But I don't have a $3 million portfolio, so I have to trust the fund managers to choose and use their best judgment on what they want to gamble with. So ULTY really is like a gambling fund. You shouldn't take out a mortgage. And I still like it. I'm really excited to have a nice options chain and give them more breathing room to go up and down. And it's always been my opinion, ULTY is never going to go up super hard. They give us too much premium. So it just depends on what your thesis is. Is it good for you in your portfolio? Do you feel like gambling today?
How hard, in your opinion, do you think it is for somebody to live off of their portfolio if they have less than $1 million to invest, or just in general?
As someone living off their portfolio with $150,000 more or less, it's not going to be the most relaxing portfolio that you've ever seen. You're going to have to be more aggressive than is recommended. So I am trying to reinvest as much as I can so that I can grow my portfolio to have, because once you reach $1 million or $2 million, it really depends on your lifestyle, right? if I can live off of $3,000 a month, I don't need as much money. If you have $12,000 a month of expenses, you are going to need the $2 or $3 million. So it is a balance between how expensive is your life and but your risk tolerances.
When you hear the term NAV erosion, what are your thoughts on it? And do you have like any worry about long-term NAV erosion in your portfolio with super high yielding products?
Everything is NAV erosion. There is no such thing as a no NAV erosion when you have high income ETFs, because if you look at the exact definition, it's paying for the contract, it's paying out the distribution. People only care about, does the price recover? That's what people really mean by, at least that's my impression, is can I put my money in and 6 months from now, more, unless there's like big market issues, have the same or more money. I don't have a problem with MSTY because I lived through, they had a 20% increase one day. MSTY made 18 when Mr. made 20%. I'm like, okay, well, it follows the underlying. So Mr. lost 40% of its value. Like, I'm not going to say that MSTY is a bad run fund when the underlying is not doing well. So it's just managing your portfolio size, and you're having a good thesis about why you're in it in the first place.
What factors for you go into determining which cover call ETFs to buy and when to buy, and also when to sell off some of your ETFs in your portfolio?
I am trying to do the most well-diversified options that I can with the highest yielding, with least amount of NAV erosion. It got to the point with the margin account where it was like, I really just need it to stabilize. So I was looking into gold ETFs. And then we were in the bull market and I was like, wow, what would be great is if I started to hedge like a big girl. And I asked YieldMax when we met, I was like, hey, can we actually have SLTY? Because I need that, like something like that in my life, because at that point I did have 30% of my portfolio in ULTY. So can we have the same strategy just with shorting? Right now, 30% of my portfolio is in SPY leaps. I won't get more diversified than the S&P 500. I feel more comfortable with having 30% in S&P 500, 30% in gold, and then Bitcoin's just a conviction play.
Do you think that hedging is super important for income-focused investors? I know you have SLTY as well as Winter, but do you think overall hedging is necessary for income investors who have a big portfolio or maybe even want to utilize their income for their own needs?
It depends on what your risk tolerance is, how big your portfolio is, how much of it you're living off of. Do you have a year of expenses saved up in a savings account? Because if you do, you don't really need a hedge. But hedging for me, and if you want to try to rely on different indicators, that's on you, but I'm not saying like I'm smarter than the market or anything. So 20% seems like arbitrary, but also like the correct amount for me to hedge in my portfolio. If you want to keep like the value of your portfolio pretty stable, then yes, hedging is, but not like 50-50. 50-50 just strangles you.
How do you handle criticism from maybe people saying, like, how do you live off of this like portfolio that doesn't seem possible, but you're doing it? And just from people being critical of your investing style and maybe just your journey right now.
Most people don't say that to my face, which I'm super grateful for. But most of the criticisms are like, I still use my AI generated thumbnails, which it's the character. People know when they see a white-haired woman on a thumbnail that it's my video. So that's what that is. A lot of my audience is actually just like, hey, get out of this cover call crap and do your own options. So I think my audience will actually be really excited that I started to do more leaps. And I've been hesitant because, well, there's a few reasons, and I've stated them before, where they're not marginable. So right now I have like a 15% margin buffer. That's not enough. And it's not tax efficient as using the ETFs. And there are other considerations besides I can make more money on my own. But yes, a lot of my audience think that I should be just doing my own options instead of doing cover call ETFs. And if I had a bigger portfolio, well, I mean, I'm doing it now, but it's not comfortable. Thankfully, my audience is mostly supportive.
Since you try to target $9,000 per month in distributions from your portfolio as income, is that been predictable and reliable every single month? Do you plan on doing this strategy of living off your portfolio for, I guess we could just say forever?
Yeah, well, so far, the last 4 months that I've been living off of it, yes, it has, in fact, been, I have reached my goal every single month. I'm hitting my stride. I've also changed my strategy within there. So eventually we'll have like a really good test to see, is this sustainable? I will confess, and my audience knows this, that since I did wind up paying like $80,000 to close on my condo, I got a little fed up. So I converted my Roth IRA to have more high income ETFs, and I'm using the distributions from that to buy into my taxable account. And yes, that does have the 10% penalty, and I have to pay the income taxes. However, I do think I need more than $150,000 in my account to make it sustainable in the long run. So we're just going to have to do that until I have enough money in my taxable account, and we prove that I can generate enough money on my own. But the process, like my thought process, because I could just have taken the money out of my Roth IRA, paid off all my debts, and it wouldn't have been a problem, because without all of my debts, I live on like $2,000 a month. But then I don't have a retirement account. So I converted it into high income ETFs so that I don't have to take the principal of what's in my Roth IRA out. I can invest more into my Roth IRA as I go, but at the end, I still want roughly the same amount of money that's in my Roth IRA, before I got laid off in May, to be there at the end so that I can retire at retirement age with my retirement money meant for retirement.
I see that you also have margin incorporated to your strategy. Why do you use margin, and should beginner level investors be thinking about margin, or should they just completely stay away from that super high risk?
I actually took out a $50,000 personal loan and I invested it in Robinhood. And then I took out the margin loan to pay for my condo. It's convoluted, but basically I'm taking out the minimum amount I need in order to make the money I need to make this sustainable. And so I have been working. I had $77,000 of margin in the end of August, and now I have $50,000 of margin. So I'm slowly trying to make it less margin. And I would never recommend what I'm doing. Like, just keep your job until you have enough money. That is the best way to do that. Unfortunately, I'm a front-end programmer. AI took my job. I'm trying to make this work, making the best out of a bad situation. But for a beginner, I would start off with something like only take out enough margin that you can pay off every week, or you have the cash in a savings account, or it also depends on how risky the things that you're in. But I do think that having high income ETFs with margin is better than doing like the degen plays that people used to do, like the day trading, because if you lose, you're still making the income. You can still pay the margin back, hopefully, in theory. So it's kind of like a credit card. Like the rate, your credit card limit isn't the limit. It's whatever's in your bank account that you can pay off every month. That's the limit. Have
you ever had a margin call?
Once, but it was more of a timing issue than an actual timing call. Like the funds hadn't settled yet. That's one of my bigger goals, is just like, don't margin call me. I don't have more money to invest in this. So let's just be a responsible investor, because when you're borrowing other people's money, you should be more conservative.
How much of your living expenses alone are covered by your income that you're generating from your portfolio?
100%.
100%?
Everything. Yeah, I mean, with all of the debts I'm paying off, which when I say debts, it's 0% credit cards, I'd like to keep that way. So I'm paying them off more aggressively. My personal loan, my car loan, my trailer. So, it's quite a lot. It's like $6,000 right now. And then I'm paying an extra $3,000 a month towards the credit card. So $9,000 per month. I have expenses, but that's temporary. In 4 or 5 years, my expenses will be like $2,000. And if I've been paying $9,000 for 4 years, $2,000 is going to be a breeze.
I'm just fascinated by this. I don't know how people are gonna react, but
I know it sounds delusional because I am generating 100% yield and I'm living off of the 100% yield. But oh man, there's definitely more to that sentence. But it sounds delusional. But I am slowly taking the money from my retirement account. And so hopefully I can pull back on the more high income stuff. I can have more SPY leaps. I can make my portfolio like look like a normal portfolio and not have to have it as high of a yield. That, I mean, you haven't asked me what my ultimate goal is, but my ultimate goal is to, maybe I can have a 30% yielding portfolio and live off of that. So yes, this is temporary. I am trying to set up my own business with YieldMax to generate more income with that as an alternate income so that I'm not relying on having 100% yield. In the worst case, I could stop hyper paying off my credit cards. There is some wiggle room in my budget, but for me, it's the most risk I have right now is like, I have all this credit card debt. I have this personal loan. I would rather not have any debt and then also have, my high income ETFs.
so it sounds like you want to go from 100% yield down to 30%. But what about other financial goals you have? Like, do you have a certain portfolio amount goal, maybe a certain income goal from your portfolio, maybe just overall financially, or maybe even personally that you might have long term?
I'm not really into like, I need $1 million. Like, I don't, I just want to be able to have this be sustainable, that I can prove to myself that I can do this long term, that I'm not, being so risky. And then I want to buy Bitcoin and then I want to pay off all my loans. And then from there, it'll be fine. Once I make the $15,000, that's my biggest goal right now, is I want to make $15,000 a month because that's enough for my living expenses to pay off my debts and then also, have money for taxes and, reinvest some. So $15,000 is a hard goal I'm working towards. I just can't, I'm not willing to go more risky at this point to achieve that goal if it's not sustainable. Once that goal is there, I'm going to start investing more into growth funds like, SPMO and SPY. And that way I'm keeping up with inflation. I don't have the capped upside, things like that. So that's the majority of my goal. Is I would really love someday for the high income ETFs to be a proportionate amount of my portfolio and not just like 120% of my portfolio.
Yeah, I know. I don't know, but I know.
I mean, yes. Please don't do what I'm doing.
Do you think that the average person could do what you're doing? I know that the answer is no. The risks of doing what you're doing and maybe why somebody shouldn't copy it.
I mean, should someone be 30% in gold and 30% in the S&P 500? Sure. Yeah, that's 60% of your portfolio. That sounds reasonable. I think where I got into trouble is I do have high conviction in the long term with like Palantir, NVIDIA, and strategy. But because I'm living off of this right now, individual stocks go through periods of momentum. So when they have breather moments and you're reliant on it to live, it becomes more devastating. So basically having the other streams of income, making sure that when you do have high conviction things, that it really is no more than like the 5% of your portfolio. That way your entire portfolio isn't devastated. I do still believe in the S&P 500. I think that gold it's a good soft hedge. Bitcoin is my conviction play. So I do think that, 4 years from now, it's not even going to be a question of why I was so much into Bitcoin.
What has been like the biggest challenge about relying on your cover call ETF income? And do you have like strict budgeting to really follow if you're going to make it this month with your income goal? And how do you keep track of like all the funds in your portfolio, seeing which ones are doing well, which ones aren't, and which ones to add more to, or maybe even cut?
I think the biggest problem is I am self-aware enough to know that this is not normal. Like, you cannot have 100% distribution and expect it to end well in the long term. So I'm really trying to be strategic in how I'm managing my funds so that we can power down my portfolio and make it to be like more intuitively sustainable. Yes. So for me, I live in the countryside. Like, literally, it takes me an hour to get to the grocery store, the closest one. So I don't do anything besides I have 4 dogs, which are expensive, and there are things I could do to make them less expensive, but we all have our habits. So I have 4 dogs and 4 cats. So but I live by myself in the middle of the woods, basically. So let me have my animals, okay?
Do you ever have a fear of like a major recession, stock market pullback? Because that would significantly affect your NAV and your income from your portfolio, just cause maybe some mayhem in your strategy.
I flash back to last week. But so that's why I opened up my leverage trash account, because I was like, I like my leverage stuff, but I really just need my margin account to not move with all of this stuff. So I'm actually really impressed I didn't get margin called, because I had MST in my account until like a week or so ago. So I was like in it, and I have been really steadily at around 30% margin, but it's just because I had so much gold. And so, yes, it's been like I stare at it, and I have the bad habit of just like opening up Robinhood and just like staring at my account. But overall, it's better because I actually wrote down my thesis and like, this is how you're going to invest. The problem is with sticking with it. Like, we get the feeling, like, I just looked at PLTW and MVOI, and I'm like, I like you. I like the amount I have in my leverage trash account, but this is probably not going to end well for me. And I was looking, and I was like, well, I actually have enough money in this to buy 4 SPY leaps, which I can do my own cover calls. So that really helps. And it comes with its own stress doing your own cover calls, but I think overall having so much in gold and doing my own SPY leaps will really help with my stress levels.
Do you have any like succession planning, or the right word would be backup plan, if something unfortunate were to happen in the markets and you were to pay off this and take off this debt and then like be okay?
The amount in my Roth IRA right now is more than the total debt that I owe in the real world. And I'm not upside down in my truck, or at least not by much. So I could trade it in and get like a Nissan Versa for like $10,000 and there's things like that where, yes, we do have like the disaster and recovery planning of, if literally everything blows up, then these are the emergency plans. But SPY leaps are the funnest thing to do in a market crash. So you just keep rolling them down and you keep earning more money. I don't think gold's going to go to zero. I mean, everything's a bet, but yeah, the only worry I have with gold is that it's had such a big run up, like the 50% increase in value, that there could be a 50% decrease in value just to get it back to where it was. But overall, if I can't make it with the 500 biggest companies, I always think there will always be the 500 biggest companies in America, and I think gold is always going to have value. So I think we're good.
What do you wish that you knew before starting an income focused portfolio, and maybe even just before living off your portfolio as well?
Like I knew what I knew, and I can't regret anything I've done along the way because I've just been using my intuition and what I've learned to make the best decisions that I could at the time. But when I was first laid off, I was very hesitant to do my own cover calls because, like, oh my gosh, like, if I mess this up, I'm losing real money. But now all of the single stocks that I put bets in have lost like 20 to 40% of their value. Well, I would have been better off if I had just done my cover calls to begin with and not been, because back then I would have had a 15% margin rate, a margin buffer, and now I have a 15% margin buffer. I'm in the same spot, but with less money. I still have conviction in the things that I have conviction in. The April pullback really helped with, like, oh, I actually don't care about this that much. I'm going to sell it. I'll just stick with the 2 or 3 that I really care about. And I guess that's also a lesson, because if I had been diversified, my portfolio wouldn't have been hit as far, but I only wanted to be in things I have conviction in if it goes down. Being in single stocks and being in high conviction things need to be proportionate to your portfolio. And I wish that's the only thing that I could have, like, if I was a financial advisor to myself 3 months ago, I would have been like, no, you need to be in gold and you need to be in the S&P 500. I know you like strategy, but put it down. So, yes.
Best financial decision and your worst financial decision.
Okay, so my worst financial decision was buying that condo in DC. I didn't even realize it until I left and I went to go sell it. The first buyer pulled out of the deal. The second buyer, the mortgage company refused to grant them a mortgage. Third buyer had the same issue. Fourth buyer had the same issue. And it took 2 years. I spent 2 whole years. That condo with the mortgage and the HOA cost $3,000 a month. My life here costs $3,000 a month. I earn $6,000 a month. Like, there's no extra money. There might be like an extra $200 a month. I was not used to living like that. I was used to saving half my paycheck and like having money in order to invest, because I always wanted to retire early. I just thought it was going to be, with $1 million later in life. So I got really, and then I wound up having to pay almost $100,000 to close the deal. And I don't have an outside employer right now. So it's just like, I wish I hadn't put myself in that financial position, because I was basically paying rent for an extra 2 years and then I had to pay $100,000. So it's by far and away, like, even though we've had a pullback in the market, like, it has not topped. Like, it's not a competition, the stock market, but I have been treated much better in the stock market than I have with real estate. And I know that other people have different experiences, especially if you buy a property for the intention of investment property. But for me, I'm never touching real estate ever again. It's not for me. I don't have the constitution. I had a tenant after the fourth fire, and he set the kitchen on fire, and I was like, "Are you kidding me?" And then the air conditioning broke, and he broke the toilet. And I was like, literally, I just want you to pay me rent, and I'm gonna earn money. And it wasn't even enough to cover the mortgage and the HOA. So I was like, I'm losing money every month, and it. If you can feel the stress, I still have like PTSD from it. So yes, worst financial decision. The best, I think, I learned about the S&P 500 from a college professor, and I didn't invest right away. I didn't know what it was. I didn't even know that you couldn't invest in the S&P 500. You can only invest in things that track the S&P 500. I lived in China for 3 years, and doing banking internationally, especially back then, was extremely difficult. But as soon as I got back to America and I was making enough money to live on, I looked up the S&P 500 and I started just investing in VU. I think having the habit of investing early was the best financial decision.
What do you think is the biggest misconception that investors have about cover call ETF investors specifically? Not just ETFs, just like the investors who do the investing.
I think they think we don't understand what's the mechanics behind high income ETFs. Like, we don't know about return of capital, that we don't know the costs associated with doing this, that we have a capped upside. So it's not free money. Nothing in life is free. There is a cost to doing cover call ETFs. It's just one that I've accepted as the cost of doing business.
Has taxes been a big concern?
Have me back on in like March or April, and I will let you know. But right now, I'm offsetting like $100,000 loss on my condo. So I'm assuming I'm not getting taxed this year, but you never know on a rental property. So if it was a private sale like of a home, you can't tax deduct that. That's just closing a sale of a house. But because it was a rental property for a year, I can take that as a loss. So it is what it is, but I'm pretty sure, hopefully I won't be getting taxes this year, but I'll pay attention to like how it works, because it really does depend on how much winds up being return of capital. And they do, the fund managers, they estimate it as we go along, but we always use Misty as an example, as return of capital, return of capital, return of capital. And then in December, it really jumped. And all of a sudden there's no return of capital and you have taxed consequences. But for me, my engineer job, my day job, I got income tax on that too. So how is it different than earning an income when this is basically my full-time job? So it's not the worst thing in the world to get income tax. It means that you had income to be taxed.
Do you prefer ETFs that pay monthly or rather weekly?
Okay, so I understand the argument of I can budget myself. I have personally been paid once a month, especially when I was in China, and then more recently as a government contractor. But as this is my only income right now, I appreciate the weekly paying ETFs because I can track better. Am I making enough money this week to pay all of my expenses? Like last week was the first week that I was short $150 to make my minimum goal. So I made changes this week so that hopefully I'll make my goal of the $10,000 per month.
How has your mindset shift about money and investing? Because you said that at one point you were saving a lot of money and being a good saver, and then now you're saving less and living out of a portfolio. All these different things are going on. So how has your mindset shifted about specifically money and investing?
As I have become more skilled with like options and stuff, it's like, okay, well, how can I make money this week? And not like, am I going to make enough money this week? So it's really freeing. And as long as I have enough money and enough margin, I could pretty much, be resourceful and get myself enough money. So I think it's been really empowering for me to learn about cover call ETFs and how to do my own options, which I'm not an expert in options at all, but I am dipping my toes in more.
How do you drip? Do you automatically reinvest 100%, which I'm assuming not, obviously? And how do you balance enjoying your distribution income now versus preserving that capital for sustainability in your portfolio?
My retirement account is the most fun because I have $200,000 in there. So on Mondays, I've been taking 80% of that and transferring that to my margin account. But then for the rest of the week, everything else I make, I reinvest. And basically, I just go down the list, and the things I have conviction on, I'll put in a little bit of money. I'll put a little bit of money in SPMO and WPay, all of these things. So it's basically whatever I feel like investing in at that moment, whatever price is down. That was basically vibes at this point. But we have my Roth IRA. My margin account is basically, I'm looking at my margin buffer, and I'm trying to get my margin buffer to 50%. And I did because I bought the SPY leaps today, it was 1 step forward, 2 steps back. So now my new goal is 25%. Like, we need to make it so I have as much margin as possible. So I'm not reinvesting there that much. When I transferred over, I'm putting 30% into gold. That way I have enough money to pay taxes. But other than that, I'm going to be really chill and just try to make it work with what I have in there right now. And I actually started doing SPX call spreads instead of actually investing in stuff, because I just don't have enough money to, like, I need to be able to do the margin loan and transfer that money into my checking account so I can pay my bills. The leverage trash, I've been trying to get up to 20 shares of the ones that I choose. So I'm working on WPay right now. So when I get to WPay, I'll choose the next thing. Basically trying to get like 5 of them that I'm rotating through to get, 20 shares at a time. Sailor Mooning one, which is my strategy related one. I want to start, having it be more like the silo that I've been trying to talk about, where I'm investing a little bit into MSTR, a little bit into STRC, a little bit into the other income ETFs. So it's not the actual dividend reinvestment plan, but I am trying to strategically reinvest as much as I can.
How did you learn about investing in the first place?
Mostly myself. I was looking up VU, and I found the 3-fund lazy portfolio. I've not ever been interested in becoming a day trader. It's not what I do. It's not who I am. Like my dad, I got the frugality. I got the saving from him, but he doesn't even know what an ETF is. So and to be fair, when I was first learning about that, ETFs were newer and they weren't as widely adopted. Like you couldn't do fractional shares. So it's been evolving, but having the basics there. I actually started a finance blog when I first started learning about investing, because I found it so interesting. So it was a good foundation. I already had the foundation before I became a financial influencer on YouTube.
What's the biggest takeaway that you want somebody to know about yourself, learn about your journey right now after hearing everything about your investing strategy?
So don't do what I'm doing, please. But you're welcome to come along on the journey. I appreciate all the support along the way. And I talk more about my logic behind why I think something is a good idea or not a good idea and why I'm doing it. And I feel like people find that to be valuable as they reevaluate their own theses and how can it fit into their own lives. So also, if you're a high income investor, use YieldMax. We have is a good comparison tool. We've noticed over time that things that pay more than 40% yield are usually dividend traps. So if you want to filter those out, and if you only filters and different views that you can use, and just use that to help launch your comparison and which funds you want to be in.
Thank you so much, Amy, for sharing your investing journey and just for being on the channel. I really appreciate it. If you guys like this video, please give it a like, because this cute puppy did. Thank you guys so much for watching. And now, once again, this is not financial advice. We are not financial advisors. Do your own research. Investing involves high risk. And I will see you guys on the next one.